Hello everybody, welcome back to our channel SSCMA classes. So we are going to resume our direct taxation classes for CA final and CMA final students. Okay, so today's topic, hope you already revised the previous day lecture, right? Hope that every topic, upper and rollback, was clear to you. Now moving forward to today's topic, we are going for secondary adjustment. Okay, before knowing about secondary adjustment, we have to know about the primary adjustment. Okay, so let's see where the secondary adjustment have to be made, since what is the law saying that the secondary adjustment, one should have accepted the primary adjustment made by assessing officer, right? One should have accepted the primary adjustment made by assessing officer. Okay, secondary adjustment is only done once you have accepted, the SSC have accepted the judgment by whom? By assessing officer, right? And the primary adjustment is of rupees 1 lakh. The transaction, if the adjustment is less than 1 lakh, then in that case there would be no secondary adjustment, right? For secondary adjustment, the very first thing says about law that you have to, the primary adjustment should exceed 100 lakh, which means 1 crore, right? The adjustment should exceed 1 crore, then only you can go for the secondary adjustment. Okay, and the assessment year, it should be of, if the adjustment is of assessment year 16, 17 or earlier, in this case the secondary adjustment is not going to apply, right? First of all, there should be primary adjustment should be more than 100 lakh, right? Primary adjustment is the adjustment of 100 lakh, right? 1 crore, right? So the transaction should be more of 1 crore, right? Second thing says that it should not be of assessment year 16, 17 or earlier of those years. Okay, this part is clear. So now let's go for the definition of secondary adjustment. Let's read out. Adjustment in the book of accounts of the SSC and associate enterprise. It's the actually adjustment between book of whom? SSC, definitely. First person would be SSC and the second person would be associate enterprise, right? Because the transaction is between them, right? The transaction. Okay, so there would be an adjustment of book of accounts, adjustment of BOA, right? Of whom? SSC and associate enterprise. Yes, the reflect that actually, what is the main purpose of doing this, right? To reflect that the actual allocation of profit between SSC and associate enterprise. Okay, now there are cases where secondary adjustment is to be made. Okay, SSC shall require to carry out secondary adjustment where the primary adjustment to transfer price. Okay, there are some cases where secondary adjustment is going to be done, right? But for that, first of all, what is to be there? For secondary adjustment, you have to go for primary adjustment first, right? Primary adjustment says that the transaction should be of more than 100 lakh, right? 1 crore, right? And second, if the transaction is of between which years? Assessment year of 16, 17 or earlier of them, right? In that case, we are not going to go for secondary adjustment. Is this clear? Yes, this is clear. Now, in case of when the secondary adjustment is going to apply, right? When, let me take this, okay? When the primary adjustment to transfer price has been made by the SSC, suo motu by the SSC. First of all, very first thing, when the adjustment is made by the SSC. Second thing, which is made by assessing officer, definitely. This one was very clear, right? Very first case, when it is made by SSC. Okay. Second case, when it is made by assessing officer. Third case is determined by APPA, advance pricing agreement, under section 92 CC. APPA, remember? First by SSC, second by assessing officer, third by APPA 92 CC. Very good, guys, you remember the section. Then safe harbor rule under section 92 CB. Safe harbor rule under section 92 CB. One more, by the mutual agreement procedure MAP, which we can say for MAP under section 90 and 90A DTAA. Remember something? Do you know about this? Okay. We'll let know about these things, but right now we have to complete this topic. Okay, so there are some cases when the secondary adjustment is going to be made, right? But for that, first of all, the condition first says that if it is accepted, it is made by suo motu by the SSE himself, second the assessing officer, third upper under section 92cc, right? Safe harbor rule under section 92cb, right? Then third last MAP under section 90, right? And under section 90A. Is this clear? Yes, this part is clear. Okay. I also told that secondary adjustment has to made since the company has accepted the primary adjustment made by assessing officer, right? This was also one of the condition. Remember, this was also the one of condition, right? Yeah, this is that condition. Okay, and the primary adjustment is of 100 lakh or more. Okay, and it should not be of assessment year 16-17 or earlier of them. Okay, okay. Now the excess money available. Now what is this? What is this topic saying? That if there is such transaction between associate enterprise and SSE, in that case they have to repatriated that excess amount to India, right? Let's go for what is written in here, that if the excess amount available with the associate enterprise, right, with the associate enterprise, if not repatriated, which means which is not given back, if which is not returned back, right, to the India within 90 days of the date of such order of assessing officer, would be deemed to be as advance, given to that associate enterprise, given to AE by SAC. Is it clear? Which means if the excess amount available with associate enterprise, for example, I have done a transaction with my associate enterprise and that associate enterprise definitely is outside India, right? So I've done a transaction with one of my associate enterprise. For example, transaction was of 5 crore. Okay, and actually the transaction was of not that value. Okay, I've shown the value higher, right? I've shown the value higher, and actually that was not up to that. For example, in that case, what is going to happen? And I have done this transaction to save the tax. Okay, so in this case, the excess amount, for example, 1 crore or 2 crore was excess here. Okay, 2 crore was excess here. Okay, in this case, that 2 crore is to be returned back to India, to the government of India. Okay, from which date? 90 days of date of order of assessing order. Otherwise, what is going to happen? The excess amount would be deemed as advance given by SSE to whom? Associate enterprise, right? And interest would be calculated on such advance at the rate of 6-month LIBOR as on 30th September plus 3%, which means they are going to take the interest amount from 38 advance rate at the rate of 6-month LIBOR on 30th September, LIBOR on that particular day plus 3%. Okay, plus 3% on that date LIBOR, right? Let's go for the other thing. This was actually one of the option available for SSE, right? SSE have two options. Either they can repatriate, means give back that amount, okay, to the Indian government, right, within 90 days. Okay, this was the very first thing. And again, what is going to happen if that amount is not given back to India? In that case, the excess amount would be deemed to be as advance. Okay, and if you have given somebody advance, what is going to happen? You'll get return something, you'll get interest in return. Okay, so government is going to take that interest, would make that interest as your income, right? And you have to pay the tax to the government. Okay, so actually government have made this process so that the SSE and associate enterprise, okay, do not do such transaction falsified transaction. Is it clear? Yes. Okay, this was the very first option when the SSE and associate enterprise are not giving back the amount, excess amount to the India, okay, within 90 days of order of associate enterprise. Okay, and what about the second order? Okay, second, and actually one more thing is there, that once it is deemed as advance, okay, it is deemed as advance given by SSE, okay, in that case the interest, they will charge the interest on a regular basis, okay, and taxes, of course tax is paid on interest amount, definitely whether you are going to get that amount or not, okay. Second thing, and that interest tax would be applicable up to which date? Which date? Which means until you receive back that excess amount to India, okay. Till then the government is going to impose tax on that particular deemed advance amount, okay. Is it clear? And there is another option, additional option given to the SSE, option to pay additional income tax if the excess money not repatriated, which means if again there was first option was that the amount, the excess amount is going to be deemed as advance amount, right. In that advance amount, which interest rate is applicable? LIBOR on 30th September, right, plus 3% rate is chargeable, right. Okay, is this part clear? Yes. Second part, if you are not given that additional amount, in that case you can pay additional income tax of 20.9664%, which is 20.9664%. Is this clear? Which is 18% tax, 12% surcharge and 4% cess, which is 18% tax, 12% surcharge and 4% is cess, 20.9664%, okay. But there is one more benefit in this option, that once you pay this additional income tax, then need not to do anything, okay. Then the government government is free right now, okay. They just want their money back, either in form of tax or whatever, okay. So in this case government have given you freely that once you are paid this amount, this additional income tax, then you are free from our side, okay, on such excess amount or part or through. Let's read now, where the additional income tax is so paid with not to be required to make secondary adjustment and compute interest from the date of payment. Exactly, this is what I said, okay. In this case, once you pay this additional income tax of 20.9664%, okay, 20.9664%, in that case no additional adjustment is done, no additional no secondary adjustment is done, right, and no interest is computed, right. Is this part clear? Okay. So the SSE is having two options with them, okay, which is either you have to bring back that excess amount to the India, or that excess amount is going to be as your advance given to the associate enterprise, and on that advance we are going to take the interest chargeable at the rate of LIBOR on 30th September plus 3%, okay. Is this part clear? Otherwise please give us the additional income tax of 20.9664%, right. In this case, once you paid this additional income tax, then need not to go for secondary adjustment, okay. You need not to have to pay additional interest on such income, okay. So you will be free, okay. This was in the section of primary adjustment and secondary adjustment. Let's rewind it again, guys. What is primary adjustment? Which is exceeding 100 lakh, which is of 1 crore rupees, right. And no SSE can go for secondary adjustment until unless he is in primary adjustment, or if he is not doing any primary adjustment, in that case he cannot go for secondary adjustment, okay. This part clear? Second, if the transaction is of assessment year 16, 17 or earlier of them, in that case also the SSE cannot take or cannot go for secondary adjustment. Is this clear? Yes, this part is clear, okay. And what if And there were some cases, right? What were the cases for secondary adjustment? Either it is accepted by the primary adjustment is accepted by whom? SSC, by suo motu. Second was of by assessing officer. Third was of APPA, section number 92 CC, right? 92 CC दोबारा देखो भाई again, ठीक है? Let's map 90 90A and another was of comment below guys, ठीक है? Okay, this was the safe harbor rule बच्चों, ठीक है? Next part is that again once secondary adjustment is done, you have to give the excess amount. You have to give the excess amount. You have to repatriate that excess amount within 90 days of order of assessing order. Otherwise, the interest chargeable of at rupees at interest at rate of what? Labor on 30th September plus 3% is chargeable. Otherwise, you have to pay the additional income tax of what? 20.9664%. Okay, in this case, in second option, the SSC need not to go for secondary adjustment, right? And need not to go for to pay the interest amount. Okay, this part is cleared. Let's go for the section 92D. This is actually maintenance of information and documents by SSC. Actually, SSC have to maintain some document, right, which is specified by CBDT. And what is the condition when is this document maintained by the SSC? We are going to read this under section 92D. Okay, under section 92D, maintenance of information documents, SSC is required to maintain the documents specified by CBDT. Yes, to TP study road, which is TP study report under section 90D. 92D, under section 92D. Okay, shall keep and maintain such documents as prescribed, which is known as master file. Okay, have to furnish information and documents to AO CIT. Okay, what happens actually, AO CIT asks you for such documents. Okay, and once they ask you, you have to furnish that documents information asked by them within 30 days. Okay, further extension of 30 days can be granted by AO and CIT. Okay, so furnishing information and documents to AO within period of 30 days. Okay, from date of receipt of notice. Okay, extension by further 30 days can also granted. Okay, documents required to maintain international transaction is for more than 1 crore rupees. One person have to, once the person is doing international transaction, everybody need not to maintain this documentation under section 92D. Okay, those people who are doing international transaction and the transaction exceeds 1 crore rupees, in this case the SSC have to maintain the documents and information. Okay. And now the thing comes that for how much year the SSC have to keep that. The documents are kept for actually for 8 years. Okay, 8 years from the end of relevant assessment year. Is this part clear, guys? Is this part clear? Let's do the revision again. Section 92D is the maintenance of information and documents by SSC. Okay, every SSC, those who are doing international transaction and that transaction exceed 1 crore rupees have to maintain the under section 92 of information and documents. Okay, once the information documents are asked by assessing officer or CIT, then the SSC have to give that information and documents to the CIT and assessing officer within 30 days. Further extension of 30 days can be granted by AO and CIT. Okay, is this part clear? Yes, this part is clear. Okay, and documents are kept for 8 years, right, from the end of relevant assessment year. Hope this part was also clear. Now here comes the very important another section 92A. Section 92A, transaction with person located in NJ, which is notify jurisdictional area, which is notified jurisdictional area. Actually what happens, central government notifies some country, okay, or territory. Actually they notify some country or territory as this NGA, and once you are doing transaction with that particular area, territory, even that is in India, okay, if the central government have notified such area, such territory, such country, okay, as NGA, then the transaction between them would be again of international transaction, whether they comes in India or they are outside the India. Is this clear? Yes, this part is clear. Okay. Once SSC enter into such transaction, person located in NGA, this would be termed as international transaction, deemed to be international transaction under section 92B. Do you remember 92B, international transaction, right? So all the methods, all the provisions apply for under section 92B is going to be applied in NGA. Is it clear? Yes. So there is one more thing, that the TDS rate would be applicable for at least 30%. This is the minimum TDS rate applicable for NGA, right? Okay. And what is this? This is saying that the central government may notify any country or territory outside India to be notified jurisdictional area. Is this part clear? Okay, this part is clear. And each and every procedure, method are going to be followed as international transaction. Okay, now what is specified domestic transaction, guys? Do you remember this? I told you that we are going to cover something later. Section 92BA says about some specified domestic transaction, and we are going for that. Okay, where the aggregate value of such transaction in previous year exceed 20 crore. Once they exceed the transaction of previous year, aggregate value of such transaction in the previous year exceed 20 crore. In that case, in some specified case, they are going to be termed as specified domestic transaction, but in that case also international transaction computation, everything is going to be applied, right? Okay. Number one condition is for this is inter-unit transfer of goods and securities referred in section 80A. Okay. Second, inter-unit transfer of goods and service referred to section 80IA 8. Okay. Business transaction between SSC and his closely connected person referred to section 80IA 10. Okay. Transaction referred to in other section of chapter 6A or 10AA, in which provision of section 10A, 80IA or 8 or 10 are applied. Okay, you have to just read it and learn these sections, that's it. Okay, business transaction between SSC and his closely connected person referred in section 105 BA 4 or any other transaction which have been prescribed. So let's go for one more thing, which says that the transaction, what are the specified domestic transaction under section 92B says that the aggregate value of such transaction in the previous year exceed 20 crore. Okay, but in few cases that they are going to be specified transaction, they are number 4, inter-unit transfer of goods and services or under section 80A. Under section 80A, again inter-unit transfer of goods and services under section 80IA. Earlier was of 80A, 80A, now 80IA, subsection 8. And the transaction between, business transactions between SSC and closely connected person under section 80IA 10. 80IA 10. ठीक है, 80A, 80IA 8, 80IA 10. ठीक है, transaction between, again in transaction referred to in other section of chapter 6A or 10AA other than these section which are covered in these provision. ठीक है, and the last one says that the transaction between SSC and closely connected person referred to 115 BAB. Okay, and any other transaction as may be prescribed. Okay, okay, this was our today's topic, guys, where we have covered the very first thing was of primary adjustment and secondary adjustment. Okay, what were the rates, you have to keep that in mind. Second thing was of 92D, maintenance of information and documents. Okay, third, again we have also done notified jurisdictional area, ठीक है, if the transaction by any of the person is done with NGA, in that case they are going to be said the transaction between them is going to be international transaction. Okay, and all of the procedure of international transaction is going to be also apply in this case. Okay, computation of method and whatsoever is written as it is would be applied here also. Okay, and 92BA was a specified domestic transaction. You have to learn this as it is. Okay, and I'll tell you that tomorrow's topic is of 92B, 92 section 92B. Okay, deduction of interest under section 94B. This is one of the important, very important topic, and I'll tell you this is the most of the time I have seen that the previous year question paper are having question from this particular topic. So we'll go for first of all theory part. Later on we'll solve at least one question so that we can get the clearer version of what theory part is saying. Okay, so that's it guys, hope you like the video, and that's it. Hit a like button if you like the video, and we'll meet again in the next video. Till then, toodles guys, this was Soumya Santosh. Thank you.